Bmnr, Bitmine Immersion Technologies, just dropped into the headlines like a blockbuster cameo. A new institutional stake, a headline-grabbing $200 million investment tied to Mr. Beast, claims about a multi-billion-dollar ETH treasury that will generate hundreds of millions in staking income, and the kind of accounting numbers that make spreadsheets scream. It's a mix of treasury strategy, celebrity marketing, and startup theater. And yes, it's exactly the kind of story that either makes money or gives you a great anecdote at parties. Bmnr opened near $30.87 on a recent session and sits in an absurdly wide 52-week range of $3.20 to $161. That alone tells you this is a headline-driven, volatile name. In the background, a smaller but notable institutional move happened. Thames Capital Management bought 228,531 shares, $11.87M, in Q3, making it roughly 1.7% of Thames' portfolio and the fund's 27th largest holding. That purchase shows some institutional interest, even if modest in the context of Thames' total books. A big 52-week range means the stock's mood swings are extreme. Treat it like a sports car, not a sedan. Thames' stake is like a respected mechanic saying, "I like this car enough to keep it in my garage," but it's not the same as the entire hedge fund buying the factory. Wall Street's split scorecard, cautious optimism with big caveats. Wall Street reaction is not unanimous, but it's instructive. The tone, mixed but constructively tilted toward buy-side models. For example, B. Riley cut its price target to $47 from a much higher prior target, but kept a buy rating. The firm trimmed expectations but still thinks upside exists. Cantor Fitzgerald initiated coverage with an overweight rating and a $39 target. The consensus analyst target sits around the low to mid $40s with an average rating of buy. Analysts are recalibrating models, lowering price targets where needed, but many still see a meaningful upside if the company executes on its ETH/staking thesis and partnership plans. Those cut targets are a reality check. The initiations show conviction. The fundamentals, messy accounting, tiny reported revenue, and the strange EPS. This is the part where the spreadsheet gets dramatic. Bitmine reported $12.74 EPS for a recent quarter on $2.29 million of revenue, which looks terrifying when you see it in isolation. The negative EPS stems from a mix of operating losses, non-cash revaluations of crypto holdings, and relatively nascent commercial revenue, staking, leasing, services, that hasn't yet scaled to cover corporate costs. Some headline ratios, like extremely negative net margins, are algebraic artifacts of large losses divided by very small revenue figures. The numbers are real, but their meaning needs context. It's like watching a pop star's tour receipts where the singer booked the stadiums, big assets, but the merch and ticket revenue haven't all been counted yet. The P&L looks ugly until the settlement systems catch up. By the way, if you are getting value from this video so far and want more like this, please like the video, it means much to us, and hit the subscribe button, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The crown jewel, the ETH treasury, and why everyone's staring at it. This is the megaphone moment. Bitmine claims it holds over 4 million ETH. Public filings and company releases have cited figures around 4.06 to 4.17 million ETH, making it the largest corporate ETH position globally. Depending on ETH's market price, that treasury has been reported to be worth roughly $13 billion to $14 billion. Holding that much ETH changes everything. It's not just a balance sheet headline. It's the raw material for staking income, liquidity services, and potential DeFi plumbing. Imagine a small bank that just told you it has the largest warehouse of a hot collectible, ETH. That vault can earn yield, be used as collateral, or be monetized through services. But the vault's value swings with the market, and swings hard. The staking income claim, $400 million plus a year, pre-tax. Realistic or hype? At a recent shareholder meeting, Bitmine's chairman, Tome, said the company expects more than $400 million in annual pre-tax income from staking its ETH holdings, estimates based on a composite staking rate and the amount staked. The company's own filings and presentations calculated annual staking fee income in the low hundreds of millions at current staking yield assumptions. If true and stable, that transforms Bitmine into a yield producer, but the number depends on how much ETH they actually stake, the staking rate, which varies, validator uptime, fee arrangements, and the future price of ETH. In short, the $400 million figure is plausible under the company's assumptions, but it's very sensitive to several variables. Think of staking income like leasing out yachts. You can estimate annual rent, but if storms disrupt travel or pricing changes, the cash flow can bounce around. Now the headline that made Twitter and YouTube light up. Bitmine committed $200 million to Beast Industries, the private company behind YouTube superstar Mr. Beast. That investment was positioned as strategic. The idea is to pair an enormous ETH treasury and staking infrastructure with one of the world's largest creator audiences to pilot DeFi-powered consumer products, wallets, payments, fan tokens, etc. The deal reportedly closed around January 19, 2026. This is part marketing blitz, part product bet. Celebrity reach plus crypto treasury equals potential fast consumer adoption if the product works and regulators don't trip it up. Why this creator plus treasury idea is seductive, and why it could fail fast. Why this combo is cute. Creators live where attention is. If a creator with 500M followers pushes a payments product with instant fiat/crypto rails, adoption can be fast. Pair that with a company that can custody liquidity, stake funds to earn yield, and provide back-end rails, you have a plausible, vertically integrated product. Why it can fail. Creators are great at attention, not necessarily regulatory compliance, custody, or payments engineering. User trust, KYC/AML, custody security, and merchant acceptance are hard operational problems. Also, moving billions of ETH into consumer products invites scrutiny from regulators, and any misstep, security breach, bad UX, regulatory toothache, can blow up the narrative. Note this as well. Daniel 7 verses 25-27 tells us, "And he shall speak great words against the Most High, and shall wear out the saints of the Most High, and think to change times and laws. And they shall be given into his hand until a time and times and the dividing of time. But the judgment shall sit, and they shall take away his dominion, to consume and to destroy it unto the end. And the kingdom and dominion, and the greatness of the kingdom under the whole heaven, shall be given to the people of the saints of the Most High, whose kingdom is an everlasting kingdom, and all dominions shall serve and obey him." Want more information about the books of prophecy? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more insightful videos. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining me today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's love.